It's about that time of day again. My name is Joseph. It's already Monday evening, July 17th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish with a strong move lower, but a major channel is telling us to be looking at a reversal line overhead for the most reliable selling opportunities on Tuesday. S&P is bullish with a wide, almost flat bull channel. You know what that says? That tells us that both sides of the market are likely participating in the S&P right now, so we really got to focus on buying low tomorrow. Gold is bullish with a spike in range, telling us to use the two-try rule to buy seller failures below the range low. The euro is also bullish with a spike in range, telling us to look for failures below the low of that range and a retest of the high. And the FDAX is bullish tonight and trying to retest that spike in range we talked about from last week, but the sellers are most likely smelling some confirmation reversal and waiting for that two-try rule to fail on the FDAX. Some great charts in store for you guys and gals tonight. Hope you had a great weekend. It's great to be back here on another big week ahead of us here in this third week of the month. We got some news to talk about for tomorrow, or should I say lack of news. That's the news for tomorrow. And of course, we get some charts ready to go over here with a great plan of attack for tomorrow's session. Before we jump in though, I do want to remind you the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening, Monday through Thursday, when our newsletter goes live. Follow me on social, lower left-hand corner. We got Stock, Twitch, Twitter, Facebook, LinkedIn. Pick whatever your flavor of choice and follow me for links, charts, and updates throughout the week. Don't forget to grab those charts. One of the feedback I get from all of you guys is you love the fact that you can download and have those charts from tonight's video ready on your computer for tomorrow. Follow that link below the blog video there on the blog at Sideways Markets. And please don't forget to grab your free pass. If you're not a client here at School of Trade, what are you waiting for? Make sure you grab that free pass before you finish up your day today and come out and join me as a guest in the trade room. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can pretty much guarantee that. And don't forget, I'm not a robot. I'm a real human being. I will answer the call when you guys call the office. You can always call our toll-free number, or of course, you can always use that live support tool on the right-hand side of the website. Once again, great to be back here with you guys. Big learning and earning opportunities today on this nightly newsletter. We go to the third week of the month of July. Let's dig in here. What do we have here this week? As you can see, it's a pretty empty week. Now, of course, it's the third Friday of the month on the 21st, so we do have a little bit of options expiration on Friday, right? So OPEX, that won't affect us too badly on the euro, on gold, right, or on the crude, but it will definitely affect, right, the E-minis as we go closer and closer into the end of the week. It's also important to mention too, if you are trading crude oil, tomorrow is scheduled as rollover day. Remember, rollover, of course, being when the volume on the next month exceeds the volume on the current month. We're not talking about contract expiration for tomorrow, but we are going to be watching on crude oil contract rollover to that 9/17 contract. So we're talking about that in just a moment as well. So rollover, again, scheduled for tomorrow. We'll see if we actually get the rollover on crude oil. And then, of course, you've got later on this week, right, we've got the third Friday of the month, right, which, of course, is OPEX. Shouldn't have too big of an impact, though, on most of these markets except for the E-minis. As you can see, we don't have a lot on the calendar here tomorrow. We get some minor news at 8:30, 10 o'clock, and 4 o'clock. I'm not expecting those events to really move the needle very much tomorrow. If you're joining us tomorrow morning, though, in the trade room, our focus tomorrow will be on the opening bells and the top of the hour, right? So, of course, 8:20 a.m., right, for gold and currencies, 9 o'clock a.m. for crude oil, 9:30, of course, for the NYSE. Don't forget about the 10 o'clock shock, top of the hour at 10 o'clock, and of course transition into lunch at 11 a.m. tomorrow. Those are your milestones tomorrow, depending on which market you're trading, right? You may have all of them or only a few of them, and don't forget, you don't need to go at this alone every day. I'll be with all of our traders tomorrow morning in the trade room at 8 o'clock Eastern time as we execute the plan accordingly. Let's jump right in. So you guys have the plan for tomorrow. Again, we're watching rollover, right? Watching rollover. So what you want to do is on crude oil here tonight, you want to be comparing the 817 and the 917 contract. As you can see right now, right, the 917 contract has a slight lead ahead of the 817. Now that may continue here, and we may be trading the 917 contract tomorrow. You can't really mess this up. You know, there isn't some penalty if you trade the 817 tomorrow, because again, we're not talking about contract expiration. We're just talking about contract rollover, and that basically means once the volume is higher on the 917 contract, we'll trade the 917 contract tomorrow. So we're watching that closely here for tomorrow. They're neck and neck right now, right? They're neck and neck right now, so we'll see what we're looking at for tomorrow morning. But assume right now the 817, and then again, when I come in tomorrow morning around 7 a.m. Eastern time and get my prep going ahead of our trade room, we'll check the volume at that point and see what we're dealing with for tomorrow. Contract rollover is one of many beginner topics that we cover in the beginner course. I get that question a lot about contract rollover and how to use it, how to trade it, and all the kind of the pitfalls there. It's not that big of a deal. And again, it's one of the many topics we talk about in our beginner course. All right, let's jump right in. We got crude, S&P, gold, euro, and we'll wrap up tonight on the DAX. Crude is bearish and trying to retest yesterday's low, but this major bear channel is telling us it might be too low to sell at this point, and we'd rather wait for selling opportunities up around those resistance levels overhead. Now, one level to keep an eye on for tomorrow is that reversal line up there at 46.31, which may line up perfectly with a two-legged correction off of these lows. So we'll definitely be watching closely to see how this pullback looks for tomorrow. The key right now is we know the bears have control. We know their objective is to retest that prior day low at 45.80. And we know based on where we are in comparison to it, we're pretty close to that prior low. So we have to assume now that the better selling opportunities were up at resistance levels here overhead. I always want to be asking myself those three questions. Who has control? Where's the objective? And where are we in relationship, in comparison to the objective? So right now, as I look at the chart right now, we're pretty close to that prior day low, which means I really got to be careful. Got to be my best behavior right now, not trying to sell too low. I think one of the most important clues on this chart is this prior reversal line at 46.30. That may end up becoming a wonderful level of resistance for us to use tomorrow. I also think this little spike in channel here, right? Little tiny spike in channel. That spike in channel, remember, spike in channels always tell us to look at the first pullback, right, and the base of that channel. That is always a great sell zone overhead there as well, right? We call that the correction zone. So combine those two together, 46.30 area looks pretty, right, pretty nice there for those sellers. So on top of that, we have this bear channel. This bear channel, of course, is really at the most, right, at the least, it's falling resistance, right, a falling resistance trend line. At the very most, right, it will act as a channel, and we should see this channel rotate, right, from that high to low, low to high, high to low, right, and then back up to that high again before we see this price back down to that low. So as you can see, the one thing we have in common right now is the bears have control, but the one thing that we definitely can see here over and over again is the best selling opportunities are going to be coming up top around that falling resistance, right? You've got that 46.31 reversal line, right? You have the spike in channel. Okay, so we're definitely seeing a pattern here right now. And we also know that prior day low is only a few inches away. So we can definitely play that game. What if price goes up? What if price goes down? Well, first of all, if price goes higher, I think we've covered this quite a bit so far, right? We will see it go up into resistance and then back down. If the price goes lower here right now, this is where we got to start thinking, okay, little bit too far down. I don't want to sell too low here. If it goes lower, you want to be thinking up so we can then sell it back down, right? So you really want to be careful trying to chase after this move, right, as it goes lower. So hopefully that will give us, right, kind of the blueprint to look for tomorrow. How do we get this party going if it goes higher here? Well, let's see here. As we look a little bit closer at this chart, we got a minimum criteria of a trap high above 13. Right, so one option here, trap high. Okay, trap high is the first option. A little bit more reliable option would be a failure. Up, failure, and back down, right? Buyers sort of buy above the moving average, right? They fail and right back down, right? A great pattern here, which hopefully we'll get a chance to see here, what I call a two-legged pullback, which of course would be where we use that trend line as support, and then whoops-a-daisy, right? We go back below the trend line and then up to use it as resistance. Notice how I draw that up around that 31, right, up around those levels of resistance overhead. So there are plenty of ways in which we can sell. All of them, of course, require us to sell high, right, not selling low. Now, as the market goes lower, this is where things start getting a little more tricky. Strong move down. I don't want to sell into that prior day low. We always know when the buyers lose control from yesterday or Friday, right, the sellers want to retest that low. So the objective is pretty simple, down to that 45.80. As price goes lower, I don't want to sell into that low, so what do? Look to sell high. The key is, how do we sell high as the price is going lower? Strong move down and then trap high. Right, trap high. If this is the first time that you and I have worked together on this nightly newsletter, it's a good idea for you to learn this very simple trick. Whenever I have a situation where the only option for me is to sell low, I always look for traps. Okay, so anytime we have no other option but to buy high or sell low, right? There'll be plenty of examples of that tonight on this newsletter, so I'll go over more of them as we go. But anytime you find yourself in a position where you're kind of scratching your head going, man, I have no other choice here but to buy high or sell low, you always want to start looking for one thing, right? And that is traps, right? Obviously trap low or trap high. So right now, this would be a bull trap, right? It'd be a trap high above a prior swing, right? So if it does go lower, look for those trap highs to make sure we don't sell low. Now, of course, I don't care what direction I trade in tomorrow, right? Right now, the bears are in control. How do we turn bullish? You know, we should be ready for that. How do we turn bullish? Pretty simple. Two things. One, strength. Two, hold the pullback. Pretty simple. One, strength. Two, hold the pullback. If the buyers can get a new higher high, hold that pullback on strength, I have no problem being a buyer here tomorrow, but I'm not going to guess. I'm not going to call tops and bottoms. Not because you can't find profitable trades that way, but because they're not reliable, right? The odds of success are much lower when you try to be a buyer in a bear market and vice versa. Remember, though, right, as those buyers, strength is not enough, right? A strong move up is not enough because the buyers could fail and this could easily go right back down to retest that low. So strength is not enough. It's a good start, right, but it requires to hold that pullback right after they have that strong move. So sellers, keep an eye on selling high, right? Buyers, wait for proof, wait for proof, wait for proof, right? Don't try to call those tops and bottoms. All right, let's keep rolling here. A very interesting chart on the S&P. You know, the S&P is dealing with some of its lowest volume it's seen in over 10 years. Today we actually set a milestone on the S&P 500. It was the lowest volume recorded on the S&P since 2005, right? So almost 13 almost 13 years. They told us in grade school that we'd have to do this on a calculator, right? And they were right. They were right about that. Absolutely. I'm kidding with you. So the bottom line is we're seeing some low volume right now on the S&P, but that won't stop you from finding good, reliable trading opportunities. You just have to stay patient right now. Got to stay patient. So the S&P is bullish, obviously, with two things: a narrow trading range and an almost flat bull channel. These are really two big important clues here. First of all, the bull trading range tells us to buy below the range low using the 2-try rule and focusing on seller failures, right? So a trading range, we get a strong move up, right? Strong move up, kind of goes sideways here now. There's your trading range. Now, whenever we have a trading range, right, think of this almost like a spike in range. Spike up, strong move up into a range. The goal here is to buy below the low of that range, right? Buy below. What I'm looking for, though, is anytime I see a trading range, I always want to focus on failures. And going more specific, I look for what I call the 2-try rule. You'll learn all this stuff, by the way, how to define the ranges, how to trade the ranges in the intermediate and the advanced courses, right? So I want to buy low and focus on those failures. What I want to do is 2-try rule. 1 try, 2 try, and then back in. 1 try, 2 try, and then back in, right? We call it 2-try rule. There are a lot of different little sub-rules that go along with the 2-try rule, so make sure you log into your account at schooloftrade.com as an intermediate member. I really hope you found value in the nightly newsletter. Hope you learned a ton. I hope you'll share this information with a friend of yours, and I hope you'll come back and see us tomorrow morning in the trade room at 8 o'clock Eastern time as an advanced member, or tomorrow evening we'll do it again like we always do Monday through Thursday before 8 p.m. Eastern time. Now don't forget, if you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link over here to the website at schooloftrade.com and learn more about the trading strategies that I teach to all of my clients here at School of Trade. That's right, our free trial will teach you the basic principles of the who, what, where, when, and why. If you want to learn more about our beginner, intermediate, and advanced levels of membership, we have a place for everybody. Whether you're brand new and you know nothing about nothing, but you're excited about becoming a professional trader, or you've been pushing hard trying to make money consistently as a professional trader, but you haven't quite been able to open up that combination lock. You know, I'll tell you, being successful as a trader is just like opening up a combination lock. It's not enough to know the digits. You got to know the sequence of those digits before you pop it open and start seeing consistent profitability on your account. Guys and gals, I want to remind you, you're only one live support question away, right, from getting started. So hit me up on live support or call the toll-free number right on the website here, 800-381-2084. Like I said earlier, I am not a robot. I'll be here standing by to help you guys out every step of the way, so keep in touch. Hope you guys learned something. Hope to see you guys tomorrow morning in the trade room. If not, same time, same place tomorrow. You got it, guys. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.